Welcome to the Mad Profit Podcast, where we interview active investors, entrepreneurs, and experts who left corporate jobs to buy or start successful ventures and live life on their own terms. Listen to their stories, learn from their experiences, and heed their advice so you too can create mad profits and the life you've always wanted. And now, here's your host, Laurent Truc.
All right, welcome back, everybody. This is Laurent Truc, and we're back on with Mike Grantis, who we had as a guest before on the Mad Profit podcast. Mike at the time was telling us about bartering as a old/new way of of doing business. But Mike, I invited you back on because you've had a lot of transition within your life, but you are also a huge, passionate person when it comes to crypto. And I have not seen the crypto space on fire as it is right now for years. So I thought it'd be a great opportunity to bring you on and have you talk a little bit about what you know, what you're doing, how this space is going. Should we be buckling in? Should we be pulling the chute? Where do we stand? So thanks for coming on. I really appreciate it.
Hey, man, appreciate you having me. Thank you so much. Always a pleasure chatting with you, and looking forward to a good conversation.
Absolutely. So can you remind us a little bit about your background and what brings you through this journey to here today?
Sure, yeah. So I right now am working with a company called Satstreet. So we're an over-the-counter trading desk. We work specifically with high net worth individuals, ultra high net worth, and now starting to do quite a bit of work on the corporate side, helping private corporations get access to Bitcoin and other digital currencies within their treasury. So fairly new company, only 7 months old, but actually just yesterday cracked the $100 million mark in trading volume. So a big accomplishment for the team there.
That's crazy. In 7 months,
as you said, right?
Wow.
Yeah, it's pretty nuts. And as you said, right, the space is on fire, and I think just judging from my lens, I think there's still a lot of upside potential. And even though we've seen the price grow, quite substantially over the past few months, I still think there's quite a bit of upside. Not just in the short term, but also, if we talk broadly, 5-10 years down the road, like cryptocurrency is here to stay. Bitcoin is here to stay. The genie's out of the bottle. Now it's just about, kind of maximizing that opportunity that we have in front of us and really taking the bull by the horns.
Very cool. Can you give like a 1-minute overview? I mean, I think most people know what crypto is theoretically, but it just had such a roller coaster ride from inception to its peak to its drop to a new peak. Can you give a little bit of a history lesson of why now is such an interesting time?
Yeah, sure. And what I would say is a lot of people conflate, cryptocurrency with Bitcoin. Now, Bitcoin is the first ever cryptocurrency, and it's really the majority of the cryptocurrency market right now. It holds about 70% dominance over the entire crypto market, but there are thousands of different companies that are building on top of this base layer protocol that we call the blockchain. Now, the blockchain is kind of like the next evolution of the internet. It's a trust protocol that allows people to transact peer-to-peer around the world with kind of a global decentralized network. And Bitcoin was really the first cryptocurrency to popularize that topic and to really bring a decentralized money to the people. So Bitcoin, I can go kind of all the way back into Bitcoin's history, but it was invented in 2008 by an anonymous founder named Satoshi Nakamoto. And this, Satoshi Nakamoto released this white paper in 2008 in the peak of the financial crisis, because he knew that, he or she or they knew that something needed to change within our current financial system. So he built this beautiful mathematical protocol that allows people to transact value peer-to-peer online without having any intermediaries, no banks, no credit card companies, no foreign exchange rates. It's a global currency that everybody can use, and it is totally permissionless. So anybody can create an account. Anybody can use this to transfer value and to store their wealth. So going from, kind of 2008 when it was only a few cents to now where it is, almost $40,000 US per coin, the big difference between then and now is just adoption, right? It's adoption of the technology. And with any new technology, the adoption cycle is going to be volatile, right? Imagine you put a price on the internet when the internet was first born in the 1950s or 60s. Well, the price of the internet would have been extremely volatile in its early days, and especially in the dot-com bubble when it boomed and,
Sure.
and busted. But overall, over the long term, the value of the internet for society, for humanity, has continued to increase over time as more people have gained access to the internet and it's become more democratized. So the same thing will happen with Bitcoin. I think it's a technology that is a step change forward for humanity. It allows us to really take sovereign control of our wealth and our identities. And the more people that use it, the more technology that's built on top of it, the more value it will accrue. So whereas it's been a massive run up in the last the last decade, and over the last decade, Bitcoin's returned over 200% per year on average. And I don't know anywhere else you can find those types of returns. I just think it's still so early, right? We're only at 2% global adoption or less. And so if we think of the diffusion of innovation and when we start to get to mass adoption, then we start to really think of how far this thing can really run. So there's a big difference between something being overvalued and something just growing very quickly. And I think Bitcoin is still very much in the camp of being extremely undervalued.
Now, Bitcoin, or the white paper that was initially drawn up, was around Bitcoin and a currency. The technology has also now evolved into platforms and other things. Where do you see that heading? Like, how big of a change is that going to be? What kind of adoption does that look like?
I mean, it's enormous. And I keep going back to the example of the internet because I fundamentally do believe the blockchain is just as big of a technology revolution as the internet was. But as you said, there's so many different things being built on top of it. So it's no longer just currency. Bitcoin is very good at storing value because there's a finite amount of it and it can't be printed into existence. There will only ever be 21 million Bitcoin. So Bitcoin has a lot of the same characteristics as gold, and the reasons that gold is valuable are the same reasons that Bitcoin is valuable. It's a store of value, it's durable, it's transferable, it's a medium of exchange, those hard money principles. But there's other projects building on the blockchain as well. There's decentralized voting systems. There's decentralized platforms for building applications. So, I mean, just to give you a quick example off the top of the head, imagine we had a decentralized Uber or a decentralized Airbnb, where instead of the homeowner or the car owner driving and renting their house out and paying a fee back to that company, paying a fee back to Airbnb or a fee back to Uber, instead, since the program is decentralized and there's no corporate entity that has to make their profits, the owner of the car gets 100% of the profits from driving, and the owner of the house gets 100% of the profits from renting their space. And so these decentralized systems really provide a lot of economic benefit for the end user, and essentially the value in the ecosystem gets spread out and gets distributed to the edges. Right now, we have a society where the CEOs of the top 500 companies make more than the top 50, the bottom 50% of the world, right? And so we have this massive wealth discrepancy. And it's because all of the value that's created in these companies just gets funneled all the way up to the top. So when we have a decentralized system or a blockchain-based system that can really be the base layer of the new internet that we're building, it allows value to be diffused around society in a much more equitable way. And I think that leads to, a stronger, more prosperous society, in my opinion.
That's really cool. So you're seeing this technology, I don't want to say replacing the internet, but integrating into so many parts of tools in our lives that at the end of the day, at some point we'll be using it without even knowing it. Like it's going to just be integrated into everything we do, right?
Absolutely. And I think, the big difference between this kind of bull cycle, if we want to call 2021, late 2020 a bull cycle, and 2017, the bull cycle back a few years ago, is that the 2017 bull cycle was very much based on speculation. What's going to come? This is an amazing new technology. Imagine the possibilities of what we can build on top of this. That's what was driving the consumer sentiment on a lot of that investment. This cycle is very much based in reality. There's companies that are building applications. There's a brand new avenue for crypto use called decentralized finance, where there's you can loan your funds and borrow funds in a decentralized manner, so there's no applications to fill out. It's essentially, if you have the collateral, you can loan, you can receive, you can do all sorts of things that you would do in a traditional financial system, just on a decentralized network. And so the more we build on top of this revolutionary new technology, the more use cases we uncover. Just like we didn't know all the benefits that the internet would bring when we first invented it, we didn't know all the benefits that blockchain would bring when Bitcoin was invented. So it's very much an iterative process. We're continuing to grow in this space, but the difference with these cycles is that there's actually projects building, and there's real world use case for a lot of these functions. The one thing that I would add as well is, we're very privileged in this, in North America and in the Western world, to have stable financial systems and to have infrastructure that we can rely on. Whereas the real benefit of a lot of this technology will be seen in the developing world. And that's where a lot of the original use cases are going to come. So if a farmer can't get access to a loan, maybe he can do that in a decentralized network. If constituents of a certain society don't have access to banking, or don't have land ownership rights, and or voting mechanisms, these can all be built on the blockchain and in decentralized ways. And so I think in the same way that a lot of these, a lot of third world countries leapfrogged things like coal and leapfrogged things like copper in the telecommunications, they will leapfrog traditional internet and move straight to blockchain for a lot of, and move straight to decentralization for a lot of their use case.
Oh, that's very cool. That's very cool. Is there a fear? So you look at today, the internet is run by 4 or 5 major companies when you really think about it, right? Blockchain being a new technology, there are definitely some companies that are at the forefront of creating layers to ride on that. Is there a world in the future where it's also dominated by a few big developers? Or is because the infrastructure is so distributed that anybody can build on it, and it'll get easier and easier to build on it, that the hope is that it's not going to be really overly run by a handful of businesses?
I mean, that's a great question. I think obviously the goal is full decentralization, but utopias don't usually come true, right?
Mhm.
So there's usually going to be, I mean, even in the space right now, things like Bitcoin and things like Ethereum aren't as decentralized as we'd like them to be. A lot of mining power on the Bitcoin blockchain is centralized in, or is located in China. And I think eventually what might happen is, once Bitcoin becomes an asset class that is recognizable by global governments, and governments start to hold it on their balance sheet, just like we're seeing corporations starting to hold it on their balance sheet now.
Mhm.
Once it gets to that level, I think it might even become a matter of national security to make sure that you have mining power in your own country, so it doesn't get super centralized in one foreign nation, and they don't have rights to change a blockchain if they have over 51% of the mining power. So I think eventually what might happen is we might see nation states starting to build mining. It sounds crazy, but build mining farms to make sure that they have a percentage of hash power in their own state, or they could just provide subsidies for companies to start mining in their own country. So there will be a level of decentralization always, I think. But there's you can always get more decentralized. There's always layers to this these types of things, and the farther we build on the blockchain, I think there's going to be more ability to create full decentralization.
So talk about the mining a little bit. So you said there's 21 million maximum amount that will ever be created of Bitcoin, and Bitcoins get created through mining, right? And what are we at right now? How many Bitcoins have been mined?
Roughly 18.5 million, I believe.
And it gets
Around
harder and
there.
harder, correct? So
Yeah.
what do the last 3 million look like? Like, how does that work? Is there ever a time where we stop building because we've hit that wall?
Yeah, good question. So I'll give you the kind of few minutes explanation on my simple-ish explanation on mining. So what happens on the Bitcoin blockchain is, in order to verify transactions, computers run these programs. A Bitcoin miner is just a computer that's running a glorified algorithm. And this algorithm is doing a ton of really complex math problems, super quickly. And the goal of these math problems is to create a proof, or to prove that a block of transactions happened, that a block of transactions is correct. And so you can think of a block of transactions as just a pool of transactions that happened within a certain time frame.
Mhm.
Now, on the Bitcoin blockchain, roughly every 10 minutes, a new block is mined. So there's a grouping of transactions, and they get put into the blockchain, and each block gets added roughly every 10 minutes. Now, the computer that runs that algorithm and mines the block correctly, or first gets the block reward. So that block reward, when Bitcoin was first invented in 2009, was 50 Bitcoin. So every 10 minutes, 50 Bitcoin was being released into circulation. Now, every 4 years, this is baked into the Bitcoin protocol, but every 4 years, the block reward gets cut in half. So then in 2012, the first halving happened. So instead of 50 Bitcoin every 10 minutes being put into circulation, there was only 25. And then the same thing happened in 2016. Just like clockwork, we expected this. It's built into the algorithm. So 2016, it gets cut down to 12.25 Bitcoin. And then it gets cut into, and then just, I believe in May of last year, it was cut in half again to 12.5, and then 6.25. So every 4 years, the amount of Bitcoin going into circulation gets cut in half. And what happens over time is we have a circulating supply that kind of does this negative exponential curve, where it approaches 21 million, but never actually gets
Get
there
there.
because it just keeps getting cut in half, cut in half, cut in half.
Got it.
Also, you know, the brilliance of Satoshi building this into the protocol, you know, so many years ago is amazing, but he also built in a difficulty setting. So depending on how many computers are actively running the program, the difficulty of each block gets varied. So there's always going to be an economic incentive for miners to mine blocks, because if more miners join the network, the blocks get more difficult. If miners leave the network, the blocks get easier, and so there's more economic incentive to mine and use your electricity to verify these blocks. So I hope that that explains quite a bit, but
That
I know it's a lot
helps.
of information.
No, and I'm glad you shared that, because I did want to kind of pivot around what creates movement in a Bitcoin value, right? And initially you said there was a lot of hype, and so in 2017 it went up because of promise of how this technology can be used. Today there's people just acquiring it, and the technology is starting to come to life. But there is also a correlation, if I'm not wrong, with some of the halving, at least from a symmetry of growth, maybe not logic. Can you dive
Absolutely.
a little bit into what your analysis, and I'm assuming that's general analysis of how Bitcoin value moves as the halvings happen?
Sure, and great question. I think, you know, it really goes back to supply and demand economics, right? If the Think about it like this, right? If you're mining Bitcoin, you're paying a lot of electricity to mine those coins. So at some point, you're going to have to sell off that Bitcoin in order to pay for your electricity bills. So think about miners as net sellers of Bitcoin. They're getting this Bitcoin for mining, and then they're selling it into the market. So, you know, what happens is when a halving occurs, that output into the market gets cut in half, right? So we don't see this right away. It's not like it's baked into price, kind of like a stock split. It's not baked into the price because we haven't seen the reduction in outflows before the halving, right? So if these miners are suddenly only getting half as much Bitcoin, and then they only half as much Bitcoin is being released into the market, even if the demand stays the same, the price goes up because there's a finite amount of price of Bitcoin. So it's very much a concept of just inflows and outflows into the market. And now, so the halving is one thing, and we usually see a price spike about 3 to 6 months after the halving, because that's where, you know, the real supply starts to be kind of felt in the market with the reduction in selling. On top of that, we have massive new interest from different constituents. It seems like every day. So, you know, what I would say is every new technology needs to be adopted by 3 constituents in order to get to mass adoption. It needs to be adopted by people, by corporations, and by government, in order for a technology to really get to global scale. So Bitcoin started with people. You know, it was invented by, you know, kind of a pseudonymous inventor. We don't really know who it was, and it was really championed by people and built by the people. So the first constituents to adopt it were people. Now we're starting to see the second constituency starting to adopt Bitcoin, and that's corporations. So in the aftermath of everything that's gone on with COVID, we've seen governments around the world print trillions of dollars and put all this stimulus into the economy, which is essentially just causing the value of each dollar to decrease, right? Because if you add a new dollar into circulation, it steals purchasing power away from the other dollars that are already in circulation.
Sure.
So companies are starting to look at this and say, hey, well, if we have a bunch of dollars in our treasury reserve, we're pretty much sitting on a block of ice that's melting. And you know, the first domino to really fall in the corporate space was Michael Saylor with MicroStrategy. And he realized this. He was sitting on, you know, $1 billion in his corporate treasury, and he said, you know what, let's put in $450 million in Bitcoin in our treasury, because it doesn't inflate, it actually deflates. So it gets more valuable in price. Was instantly rewarded for that. The price spiked, doubled, and he made it, $1 billion over the course of a couple months. But he was the first domino to fall. And the next was Square. So Jack Dorsey put 1% of Square's balance sheet into, or their treasury reserve into Bitcoin. But what they also did was they filed an open source patent that showed businesses how to allocate a portion of their treasury reserves into Bitcoin. And from there, we just started seeing these dominoes fall and fall, and all these different businesses. Mass Mutual, which is a major insurance company, bought $100 million in Bitcoin. Ruffers bought, over 700 million of Bitcoin. Galaxy Digital Holdings, hundreds of millions of dollars in Bitcoin. So, and I see it every day. We work with a lot of corporations at Satstreet to help them get exposure to Bitcoin. So I'm hearing these conversations on a daily basis, and it seems like more and more businesses are starting to, wise up to the fact that this is a sound money that's stood the test of time over the past, over a decade, and has really been the best store of value that humanity has ever known. So they're the second constituency that has really started to adopt blockchain and Bitcoin. Now, governments, being the third constituency, are getting there. So, as a result of all this this COVID stimulus, we've seen the IMF make an announcement that there needs to be a new Bretton Woods system, or a new global monetary standard, in relation to everything that's gone on in the past few years. So what's going on around the world is all these national governments are building central bank digital currencies, which are really most likely going to be built on some variation of a blockchain. It won't be decentralized. It'll be a centralized blockchain. But it will allow the central bank a lot more levers in monetary policy to work with. So they can have different interest rates for different constituents in the population. If you're a business owner, you might, get a loan that needs to be spent within 3 months, or else it goes away. So there's all these different these things that the central bank can do with this new central bank digital currency system. But since it's built on a new technology, since it'll be built on something very similar to a blockchain, if not on the blockchain, it will allow payment rails, and it will allow a lot easier flow of value from decentralized blockchains like Bitcoin and Ethereum to the centralized central bank digital currencies. So when governments start to adopt these, that's when the doors fly open, and we really start to see the floodgates of how much value can actually flow into a decentralized currency. So I keep coming back to this topic, but 2% world adoption. We are so early, and there's no signs of slowing down.
So let's go back to these banks for a second. So if they're going to create their own centralized coin, right, for their currency, is it like today's world of Bitcoin is gold, and then the US dollar is the US dollar, and there's always going to be that FX? Is that how you're envisioning it? Or are you seeing governments actually saying, you know what, just like today, there's companies that are buying up as much gold as possible. Will there actually be countries buying up the true pure Bitcoin?
Yeah. So I made this kind of prediction earlier on, last year. But I think it still holds true. I think 2021 will be the first year that we see a central bank buy Bitcoin on their balance sheet. It'll most likely be a country, that's struggling with hyperinflation or just in very, tumultuous times.
Mm-hmm.
But they'll be looking for an asset that they can get their hands on that's, appreciating in value, that can actually store some of their wealth. And I think this year is going to be the first year that we see that. And just like MicroStrategy was the first domino to fall, and then it paved the way for more and more businesses to buy Bitcoin. The first country will be a big step. And I mean, it doesn't need to start with a country. It will most likely, so for example, the mayor of Miami wants to start holding Bitcoin in Miami's treasury.
Oh, that's cool.
And they're working on essentially ways to help their population start to pay taxes in Bitcoin or other cryptocurrencies. So or even nation states start to adopt the technology, it gets easier and easier for there's less career risk for anybody else to start adopting the technology, right? So
absolutely.
so right. So I think we're well on our way to that. The macro stage is set. We've got ourselves into this hole, and we need to find a sound money that can bring us out of it. And really, I think Bitcoin has been that kind of bastion of hope for the last few years, and I don't see it slowing down.
Very cool. Very cool. Is there some sort of looming risk out there where this whole thing unravels? Like there's some doomsday discussion points out there, I know. So in your world, do you see anything that could happen that could kind of light it on fire?
Man, it's a valid question. So for Bitcoin, for example, it's been around for over 13 years or over 12 years and has never been hacked. The network, the Bitcoin network, is the most secure network on Earth. There's over 3.8 million computers mining the Bitcoin algorithm right now. So with every added computer adds more hash power, adds more security to the network. So we have the most security, the most secure network humanity has ever seen. Now, what are some external factors that could put it at risk? One is regulation, which is definitely a concern. I think the difference is, with Bitcoin being a global currency, even if one government regulates it, it just opens the door for other countries to start, going full throttle. And so it actually puts the country that regulates or over-regulates the currency at a disadvantage on the global scale, because they set themselves back on an innovation scale. So I think a lot of, and remember the three constituencies, right? People, corporations, and government. If you have corporations and people already, governments are almost forced to participate because they need to make the other two constituents happy. So regulation, I don't think is too much of an issue. What sometimes gets brought up is quantum computing. Now, there's already cryptographic coding, techniques that can be used to offset the risk of quantum computing. That's still years out. And we've already, figured out those schemes to make sure that we can secure the blockchain through cryptography. The reason they're not all implemented right now is just because they're harder to build and they take more time. But the physics is there. Like there's nothing stopping us from building those things to be quantum resistant. That's not as much of an issue. Now, what about the threat of, global destruction, right? Like what if for
that we have bigger problems
for a second, Kim Jong-un pushes the red button and the whole world goes up in smoke. Well, actually, Blockstream sent up satellites into outer space that are actually running the Bitcoin algorithm. Nice. So Bitcoin is here to stay, man. It's not gonna go away. So I think there's a lot of fear, uncertainty, and doubt, which we call in the industry FUD, that the mainstream media wants to kind of push out, and it scares people, and rightfully so, right? With something so volatile, people have gotten hurt in the past, and people have definitely gotten burned just on price movement. But I think the long-term outlook is still extremely bullish. The technology continues to grow. The use cases continue to increase. The community continues to grow. So, if you believe there will be less people interested in Bitcoin tomorrow than there is today, it's a bad bet. Like, don't buy Bitcoin. But if you believe that there will be more people interested in Bitcoin tomorrow than there is today, then like there's, in my opinion, never been a more asymmetric bet in history than this, right? Like, could it go to zero? Hypothetically, sure.
Mm-hmm.
But what is the upside potential?
Mm-hmm.
Could it go to $1 million? Yes. Could it go even higher than that? Yes. Right. So if you lose $40,000, that sucks. But if you could get up to some astronomical prices, and I'm not going to put a short-term price target on it, but the sky is really the limit.
Got it. So this big spike over the last, what's it been, 60 days, part of normal movement, volatile, but part of normal movement from your perspective, and it's just the beginning.
Yeah, man, it's just the beginning. And as I said, right, with the halvings, it goes in these cycles. And even within the cycle that we're in right now, with the parabolic move that we've seen,
mm-hmm.
it's not even the beginning of it.
No.
With every new cycle, every 4 years, it grows on an exponential scale. So, this cycle might be 10x the last cycle, and the last cycle was 10x the previous. So it's not a linear growth pattern. It grows exponentially. So humans are are not great at thinking exponentially, but when you look at it on a chart, it really boggles your mind how quickly this thing can actually take off if we get to that network effect that we're talking about.
Very cool. So there's probably people from all different levels listening to this. What are recommended resources for newbies to people that are, that want to start doing some trading on a daily basis type of thing?
Sure. I mean, if you'd like to get a little bit more informed, and if you'd like to learn a bit more about the space, I actually just launched a course on Udemy. It's called Bitcoin 101. It's an introductory course. There's no prior knowledge needed. So you can head over. There's probably going to be a link. I'm sure we'll link over to the course. You can head over there. If you'd like to start trading, I mean, you can reach out to me. My email is mgrantis@satstreet.com. Sat as in SAT street.com. We, as I said, work with mostly high net worth individuals, ultra high net worth, and our minimum trade balance is 25K. So if you can meet us at that point, we'd be happy to work with you. And even if you can't, right, reach out to me, shoot me a message, and I'd be happy to point you in the right direction. I always love to talk Bitcoin, as you can tell. So no worries there. But yeah, that's where you can find me.
Very cool. And Satstreet, you said it's been around for 7-8 months. It's already hit a major milestone. You guys are growing extremely fast.
Extremely fast.
So that's awesome. That sounds like the right space to be in right now.
Absolutely. It's I hope it's just the beginning. I think it's been a wild ride thus far. I'm new to the team, so I can't take credit for the the massive explosion that they've had. But I hope to be here for a long time in the future. So I look forward to watching the space develop.
Perfect. Well, Mike, thanks for your time today and all the great information. I'll put all those links in the notes. And like you said, I know how passionate you are. We can sense it through the screen. So if anybody has any questions and really just wants to pick Mike's brain, he's actually a blast to talk to. So I highly recommend it.
Cheers. Thanks a lot, man. I appreciate it.
Thank you. Have a great one.
Cheers.
Take care.
Thank you for joining us on this episode of the Mad Profit Podcast. We hope you enjoyed the show. Don't forget to subscribe on iTunes, Google Play, or the listening platform of your choice. Also, check us out at madxcapital.com for more useful information and resources to help you achieve your investing, entrepreneurial, and business goals. See you next week on the Mad Profit Podcast.